I'm here with Jeff Kleintop, Chief Investment Strategist at Charles Schwab. Thank you so much for joining me.
It's great to be here.
So equity valuations are by most measures at their all-time highs, and a lot of people are wondering, is this the top? Can they continue higher? What's your response to that?
You know, I think 2018 could be a really good year. It'll be the first year of back-to-back broad global economic growth we've seen in more than a decade. Every one of the world's 45 largest economies is going to grow next year, very likely. That means further earnings growth. That was the secret to 2017's success. It was really about earnings growth rising every month, pushing stocks higher every month. We could see that again in 2018. The concern I would only have is this: yield curves are beginning to flatten out a little bit. It's usually could be bad news for those high valuations, could point to a recession in maybe 2019 or beyond. So while 2018 looks good, you have to keep on watch.
And for 2018, is there anything that you're watching that might concern you that could lead to an equity crash?
You know, there are a number of risks. China's economic growth, certainly a potential for a slowdown there, could shock the rest of the world. Emerging markets, a big part of why stocks did so well in 2017. Natural disasters, geopolitics, all these things that are ever present in the markets could come back to be a risk in 2018, particularly if economic growth begins to slow later in the year. That could create some vulnerabilities we didn't see in 2017, where politics, geopolitics, and the like really couldn't nudge the markets very much at all.
And you didn't mention the Fed or inflation at all. You're not worried about the Fed?
Not so much. I think we're actually starting to see a clearer path for inflation. Inflation expectations are beginning to tick up, and that means the personalities at the Fed and other central banks matter less because the data is going to matter more. Currently, the expectations in the market are for the Fed to do 2, maybe as much as 3 rate hikes next year. I think the market's braced for that. I don't think that'll be a big risk.
And you think things look good in 2018. Is there a particular place that you think is a great place to invest?
I think the most important thing is to go global. Usually in the last year or two of a business cycle, international stocks tend to outperform U.S. stocks. They're more cyclical, they're more inflation sensitive, and valuations look a little bit more attractive too. But one thing you have to keep in mind is don't concentrate. You want to be broad and really be diversified. And here's why. You know, usually we always look for a certain sector or country that's going to do well. But for the first time in 20 years, correlations have come down. Now, this is important. This is how different markets behave relative to each other. And so we're seeing the lowest correlations, meaning the best benefit from diversification in 20 years. So you don't want to overlook that. Some investors, this is the best environment for global diversification they've ever seen in their investing careers.
And when we talk about high valuations in equities, we also seeing extremely high valuations in tech. Do you feel differently about tech than the rest of equity?
You know, tech, we still like tech, actually, and I think as business spending begins to pick up in 2018, tech will benefit from that. Maybe not the consumer side of tech, which has really been where the markets have been focused on, maybe more the business spending side of technology, where the valuations aren't quite as high, but could see more earnings momentum in 2018.
What do you think the impact of tax reform will be for equities in 2018?
The thing about tax reform is it's not just in the U.S. We're seeing it everywhere. Many countries have cut corporate taxes in the last few years. The budget in France, they've already proposed some corporate tax cuts for next year. In Japan, they've already put it into legislation. It's already baked in. They're phasing it in next year. In Germany, the coalition talks are coming around. One of the only things they can agree on is some corporate tax cuts. So we may see that across the board next year. A further lift to profits in 2018 should be good news for investors who continue to be very focused on profit growth.
And is that generally already priced into global equity prices?
Well, I think there's some optimism about that taking place, but we're not yet seeing analysts put it into their estimates yet. And that's key because stocks tracked estimates in 2017.